following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. And yesterday we did the Tom O'Brien show, or I did yesterday afternoon, had Eddie on. Talked a little bit about some of the things going on with the S&Ps, the golds of the world, the crudes of the world. And obviously this morning some things have changed, especially with the S&P. So what we're going to do is we're going to get right into the S&P scene. S&Ps are up about 20. It's been some, fixes in the New York Stock Exchange. Seems like United Airlines has gotten their act back together as far as their computers. The China situation, it looks like, they've done some more stabilization as far as the government goes. Shenzhen, Shanghai, Chinext is all up significantly. But, is it up significantly relative to what it's been down? Not really. We talked yesterday on the show a little bit about, my feelings on this is they're going to come hell or high water. They're going to governmentally intervene and fix this thing. So there might be some good opportunities here. You got to remember to put your stops in if you're trading instruments on those exchanges or trading the index ETFs, if you will, some of the ones on the U.S. exchange that mimic some of those products and their movement. A lot of people don't talk about the Shenzhen as much as the Shanghai. Shenzhen is a town right across from Hong Kong. When you land in Hong Kong, you can literally take a bus from the HKG airport and be over in Shenzhen in about, I don't know, it's 20, 25 miles to get to some hotels over there. You got to, again, I think the only way to get over there is a bus. But if you ever go to Hong Kong and you want to see, to some degree, the wild, wild west of what's going on in China, just take a bus over to Shenzhen. It's everything's relatively, everything's a tenth of the price in Hong Kong, but you'll see a new financial capital being built that will rival and or surpass Shanghai, which is amazing to even say that. But it's an amazing place being built out, and it's supposedly their new financial capital. I don't know why they need another one, but Shanghai in itself is, if you ever want to, you can get into China pretty easy these days, by the way. You can, get a visa. It seems like they're not declining anyone now. You can actually get a visa while you're in Hong Kong if you forget to get it while you're in the States. I think it's going to probably run you a couple $100 last minute type thing. So, it's pretty easy to get over there. But you'll see in Shanghai, they basically bulldozed the old Shanghai and just started over years ago. About a decade ago. In that area in the Pudong, they call it the Pudong area, Pudong River, where they built the spear thing that looks like the thing they have in Seattle, pretty much, and even nicer. Some of the buildings there they make the buildings in New York look like outhouses. It's amazing what they've done there. So if you ever get a chance to go over there and check that out, you'll be shocked, and you'll understand that everybody kind of eating out of the same rice bowl, and people getting paid $1 a day. A cup of coffee in the Shanghai airport's about $8. So you'll be shocked. It's a whole different ballgame than probably what you're thinking China's about. There's obviously some areas in China that are still, the manufacturing slave labor capitals, but some of those large cities have just ramped up like you can't believe. And the thing over there that I really, it's hard to kind of take in is it's a place I wouldn't want to live or reside. I mean, it seems like the folks walking around there, not a lot of emotion, just kind of on point, focused, and just getting it done. It's a little different scene than probably what you're used to. So that being said, we're going to move on to the S&Ps here. And I had a question this morning. We try to gauge. I'm showing the S&Ps right now. I'm showing the daily of our S&Ps. We're trading 20, 60, 61 right now pre-market. We use and have used our breadth barometer really as a way to hopefully block out one side of the marketplace while trading the S&Ps. And had a good question this morning. Taking a look at the scanner and looking at the breadth situation, I've got a custom sort up right now. I'm going to go back to our indices section and got a resolution different here. So our scanner looks a little bit different. So as we look into the speedometers, the odometers at the top, you'll see we're relatively negative across the board, but yet you see the S&P futures up 2021 this morning. Good question was, does this still mean that, we've really got a overhanging negative tone to what's going on as far as all our time frames? Now, remember, these calculations here are done based on the internals. Okay, so the internals being the 500 stocks within the S&P. And if I pop up our daily real quick here and I get obtain the breadth charts, you'll notice these numbers over to the side here. On the daily situation, 289 stocks are trading below profiles, 69 trading above. This odometer is basically a simple math calculation that calculates crossovers. All right. I'm doing a huge video series today that hopefully will, be available to TFNN users. Maybe explain just a deep dissertation on this thing. Had a caller yesterday afternoon that really said our information was lacking on this from an automated standpoint. I'm going to try to correct that. But the question is, do these still hold true right now? And because a lot of the stocks, it's 8:10, 8:15 in the morning Eastern time, a lot of these stocks haven't opened. All right. So again, a lot of them are going to open up in concert with the S&P futures opening up, the high beta correlation of a lot of these stocks, and these numbers will change. So to really get a true calculation on breadth pre-market, you're probably going to have to wait until the 9:15 area, 9:15, 9 o'clock, 9:15 a.m. Eastern time area to really get true calculations on breadth for the day on the opening. So can you trust the breadth numbers right now? You can trust them as far as how stocks have opened or not opened, but you want it to get a true calculation. Wait a little bit longer, maybe another hour pre-market, because remember, these stocks haven't opened and these breadth calculations are based on those stock prices that have changed, and that's just not available to us yet. So one of the things I wanted to do, as we had looked at the weekly crossover on June 4th, I hate to keep beating a dead horse, but we've looked for selling opportunities. And yesterday, or the day before yesterday, when we rallied up hard back into that 2075, 2079 area, which was comprised, those major inflection points of the POC on the weekly, the daily, and the 240 unfair highs, that was the big resistance area. Even though we had that rally, we always wait patiently. Just to give a little bit of education here, we always try to wait patiently until some of these, and let me repost my chart here. Said we lost it. I think we got it back, right? We good? And what we want to, show here is that this is, I'm just going to mouse over here, 2079 neighborhood. This is our short term, 2074. We've got 2075 up there, 2079. Those are big lids on this marketplace. So when we gap down the other day, we rallied up. I personally tried to pick a couple of battles on the short side during that massive rally 2 days ago. Got clipped a little bit, but that's what kind of turning the wrench the same way, lose a little, make a lot. Caught some really good, a really good chance to short this off that 75, 79 area again. And then this morning, we've talked recently about not really holding these things overnight. And why is that the case? Because you've got changes going on overseas. When you're asleep, Greece could do this, that. China can make a new stance from a government standpoint. You don't want to stand in the way of government intervention, as you probably have experienced this past year. It's not a good idea. So going home overnight flat is always, not a bad thing in this type of a market environment. So you wake up this morning, you're right in the middle of a fair auction on the 240s. You got nothing to hang on to here on the dailies, but guess what? You're back into a big time inflection point at 2060 on our weekly. All right. So in my opinion, now, the markets, there's some decent news out there. The Greece thing, they've kind of extended the deadline, so to speak, or not extended it, but, got a new date out there. You got a big inflection point at 2060.61. That inflection point is 2060.35 to be exact. So, what do you do here? I'm a big fan of trying to pick a battle, again, because our breadth is going to be negative no matter what, no matter how many stocks open. I'm going to be looking at this as an area to possibly sell off of with stops above. If that doesn't work out, we're going to wait patiently, maybe a little bit higher. Maybe we're going to gravitate back to that 2074, 75, 79 area, and I'm going to be able to try this again if we go higher. Also, if we get back down below 2060, I'm going to feel relatively good if we get stopped out on the first run through to start getting our toe back in the water on the short side. So that's the way I'm looking at trading the S&Ps today. And again, you've got some stocks. I'm going to pull this up really quick if it pops up here. Here we go. What I did this morning, I used our scanner. I'm just going to go bottom on the daily and bottom on the weekly. Okay. And I'm just going to block out everything else. Now, what am I doing here? I'm trying to find stocks that are sitting possibly on maximum support or maximum resistance. So what does that mean? That means on our long-term weekly or daily time frames, I'm doing a filter. And this is another way. I don't talk about this a lot because we've been trying to find stocks that are either showing their hand as long candidates or showing their hand as weak candidates on a relative strength type trading system versus the index itself. So what I did is I'm just going to go to the first one, BB&T. And here's what our automated text says. And I'm going to pull up BB&T. And what this is identifying really is it's showing me that we've got a new profile here. We're at the bottom of our profile, 3980 on our weekly. And we're at the bottom of our profile on our daily. So we pull back to maximum support area on BB&T, and we're going to talk about this a little bit more when we come back from break on how this may be a very ripe trading opportunity.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got BB&T up right now. I've got our daily view. Just wanted to finish this up here. Unfair low is 39.76, bottom of our profile. Sitting right there as of yesterday's close. Here's the weekly. So what I did is I went to the scanner and I just did a little sort. And by the way, you put your sorts up of situations that you want to see. I wanted to see, for instance, with the scanner, something we don't talk about a lot. When we have dual inflection points lining up bottom on our weekly and daily, that to me gives me a chance to have right in front of me. There's 1, 2, 3, what is it? 8. I can't count. 8 stocks in the S&P as of yesterday's close. Now, real time, this updates every 60 seconds. These are real time prices. To give me a chance to see where we're at, the confluence of our weekly and daily, sitting at the bottom of our profile. Now, we could be rallying up into the bottom of that profile or coming back down into it, but I'm going to look at the chart action to kind of identify that. So this is BB&T. So if this has been the past couple of weeks or this past year, this is obviously an XLF stock, that ETF. We've pulled back. We've had the market pull back. The market's, kind of been on its heels here, without question. But we've got an opportunity where we know if we fall through this area on the bottom of the weekly, bottom of the daily, we may have a little bit of a whoosh sound because there's really no floor lower than this until we get back down into the 38 and some changes. But that being said, that little buffer zone there is not a bad place to play around with, and you may have a little bit of a trading opportunity and a bounce here. And the good news is you can orient stops below that area. So this is picking out something relatively ripe on just a trading standpoint. I'm looking at Boston Scientific, BSX. This is wild. 4 time frames lining up bottom. Unbelievable. Haven't seen that in a long time. BSX Let's take a look at this. Again, trying to find trading opportunities. Let's take a look at this. All right, so I love this, actually. This is a stock that's been consolidating as it's moved higher. This is an XLV stock, healthcare, obviously, and we're sitting right on support. My God, I might get my mother into this. We're sitting at the bottom of profiles on our weekly and daily. Been in a trading range while the market's been coming unglued here. And 17. Where's these inflection points? 1749. And the weekly unfair lows, let's just peg that 1744. So I'm going to go into the scanner. I didn't even need to identify that on the charts. There's the 1749. There's the 1744. And by the way, there's the 1746. So again, orienting stops below here, put a gun to my head and forced me to buy stocks. This is one of the stocks that I'd be looking at for a long opportunity. If you guys want to call in, sometimes I even give the wrong number when I do it. That's why they don't let me give the number that often. 877-927-6648, internationally, 727-445-1044. Gonna show you guys something that kind of broke my heart after this next break, so please hang around. It's a little bit of a superstitious thing that happened last night here, which I think you'll probably get a kick out of, but we're going to do it after the next break. So BSX, in my opinion, on the long side, really good opportunity there. Google, GOOG, let's just take a look at that one. That's another one that's in this criteria of bottom. And you can't find these with anything else, in my opinion. You've got, a chance to look at stocks that are down or stocks that are up or whatever, but these are sitting on maximum support. You're at the bottom of our profiles on the weekly. Google, GOOG, trading bottom of this profile 516.5, basically. Daily sitting in the same situation. Remember, weekly takes precedence over daily, over 240 down the line. And in my opinion, you've got a really nice opportunity here on GOOG. Probably going to get a little lift. We're trading 522 pre-market, but the targets above initially will be 528. And remember, you can put your stops below 517 on this type of scenario. Going down the line, Coca-Cola. Okay, let's look at this one, KO. And these are ones, you're playing the overnight game. If you're playing the overnight game, these are ones that you can look at the end of the day that might be showing some. Now, Coca-Cola is a little bit different. We're gonna want to see this cross the border above 39.99.40. We're pulling back, obviously, yesterday's price action, but we're gonna come back after break, continue to take a look at a couple of these, look at some strong stocks, and also some stocks that just may not be cooperating.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Nice music, appropriate. And this is what I was talking about before. We did these. Here's something we did for some customers. Here's our bear Taz statue, and this is our bull Taz statue. All right. So what happened last night is the bull horn literally broke off, and it wasn't because I banged it into something. It just literally fell off. So that came off. And what does that mean? Don't know. But it made me feel good. So that's my take on the superstition on the S&Ps possibly not rising too much farther. So there you go. We were looking at the scanner, looking at some picks here, and these were ones that were meeting certain criteria that I want to do. What I'm going to do is I'm just going to hit a reset here, and I'm going to go back into stocks that really have been holding up. So what I want to do is I want to go to our weekly. I want to see what's above the box on the daily, above the box on the on the weekly. And I haven't been a big fan of trading any stocks from the long side recently, because the theory that I've trying to stay with is our breadth indicators have been relatively negative. That means that we're looking to sell resistance on the index itself, but also that in itself could drag down a lot of instruments. So picking the strong stocks really, in my opinion, where we would continue to have possible market slide has not really been on my radar screen. So we've been, talking about bearish situations for a long time, and some of those bearish situations, this is one that has actually kind of done a little bit of a rally here. This is Walmart. This has been one that's been on our radar screen, and we talked about stops on this particular stock now being above 72.52. Well, that's kind of been breached here now. This is Walmart. Again, here's the daily situation on Walmart. So again, 72.52, and then we've got 72.91. So both of those have been breached. So in my opinion, this, and if you look back at Walmart, the scanner has just been on a daily basis. This has been on the radar screen. Right now, got a little bit of a break in stride here, and now I'm not saying that the stock's going to rally, because on a long-term basis, going back to our weekly on Walmart, you've really still got a massive lid at 75. So the way I'm looking at Walmart is now sit tight. Let's hope we get a little bit of a rally in the market. Oh, excuse me. If you want to get short Walmart, you're going to have to wait till 75. I'm actually not hoping for a rally in the market. But if the market does rally, maybe it'll drag this thing back up to a selling point again of 75. This stock and company still has a lot of issues, and throwing the fundamentals out the window, it's still technically, in my opinion, a good short, but it might be time to sit tight. You got a little bit higher ground to focus on Walmart. Now, a lot of these on the weekly, daily above profiles here, these are some of the ones we've been talking about. Kroger, actually KR, let's just take a look at that one. Put a gun to my head and force me to buy some things. This might be one that I would pay attention to. And here's the weekly situation on Kroger. Again, has just not really paid attention to the latest market slide. You got stops below 73.71 on Kroger. Any type of market rally, which I'm not totally expecting, could possibly put this in the stratosphere and maybe make some new highs on Kroger. So again, scanner trying to pick those things out for you. Let's go into some of the ETFs, and obviously the weekly situation on the ETFs. We've got, again, healthcare. We've been talking about this. Put a gun to my head, forced me to buy stocks. This has obviously been the sector, and some of the stocks within have just been great plays. Here's our daily grid. And again, everything ranking the ETF based on breadth, daily compilations here, everything is red. Everything's deep red, actually. So again, not really that good for the marketplace in general, especially on the intermediate. That is a sign in itself. But remember, we're going to open up this morning. Here's our daily on the globe. Check this out. Even the Shanghai still just beat to death here. So again, in my opinion, you're still looking for situations to sell. This is amazing. The entire globe is just thrown up here. Still looking for situations to sell on most of these indices, and feels like the overhanging tone of all these global markets is still negative. So we're going to move into the euro really quick. We're just going to cover some of the things we always cover here, just to give you a heads up on the day. This is what I like to see. We've got a leverage point now, 110.91.92 on the euro. We talked about this yesterday, hoping we could get a rally back up into this area. Excuse me, can't breathe. Hopefully get a rally back up into this inflection point to continue the move down. And where's the move down? Where's the targets on the euro? 109.48 and even lower. Had a new profile appear this week. We talked about this being something you have to pay attention to on the target side. Talked about this yesterday. And, in my opinion, we're going to break down below there. This is kind of the action you want to see. You want to see it not wanting to get away from inflection points too hard there. Japanese yen, we're going to cover this. We haven't covered it in a while because there have been other things to focus on. But this is the situation on the yen. We pulled back into that 121.44, breached it a little bit, coming back up into it. I'm still a big fan of going long the yen. We had to take some breaks from it. We broke down below our support on the daily 123.29, and then we've obviously broken down. I took another shot around that 122.18. Myself personally, that was a stop out again. But remember, we're kind of now banging around that weekly unfair high, which is again takes precedence over all the shorter term time frames. And still a big fan of trying to go long the yen. Remember, the theme is lose a little, lose a little, lose a little, make a lot. Don't be shy to take stops, folks. It can save a ton of money. Keep you out of a lot of trouble. S&Ps have rallied a little bit here, 2062. S&Ps are up about 23 this morning. This is the long-term situation. Still going to try to hang around in there and let the 2060 area be something I'm going to pay attention to on the short side, and make sure my appetite for risk is not too high above that 2060 area before we start taking some medicine if we have to on the short side for the S&Ps. Okay. We're going to take a look at Alcoa. They've got some earnings today. This is one we've been kind of pounding the table on the short side about. Again, earnings coming out. This is a long-term weekly view. We've been kind of talking about this short from way up there. 15 is where we really started focusing on it when we started getting below profiles in long-term, and then some selling points again around that 14 area. And again, now we're trading $10. So earnings today, just my opinion, might want to sit on the sidelines. Enough's enough, and kind of re-gauge after those earnings announcements. Hopefully we'll get some new profiles appear and some new things to focus on for Alcoa. Let's take a look at crude oil. Yesterday afternoon, we talked about this. Is it time to, is enough enough? Is it time to start buying crude oil? Obviously, that was something that we didn't take advantage of because we talked about let's just wait until we have some new profiles, some new things to focus on. We've got an orange bar appearing today. Now we will more than likely have a new profile appear by the end of the day, by tomorrow morning. Then we'll have some new things to focus on and to see whether we're going to break stride here or we're just going to look at new resistance areas to sell on the August contract on crude oil. All right, we're going to take a look at the XLE. Obviously, this has not got, well, we've got 73.62 pre-market here, and that's not reflected in our daily charts on the XLE, but this is our long-term on the XLE. This is our weekly. This is our daily. So 73.71, bottom of the box on our daily profiles. Crude oil's rallied quite a bit. XLE's trading 73.62. We're coming up into that bottom of our profile area on the XLE. Stops, in my opinion, can be oriented above there. And the trend, in my opinion, is not going to be broken anytime soon on crude oil or the XLE. So don't get carried away with a little bit of a rally in crude oil. This thing could continue to head south. Gold, just, not a lot to talk about there, in my opinion. We've got some day trading action here. Bottom of the box, still 1170 on gold. We've got to get back up there to look at shorts again. But on the short term, this is our 240. We have broken above 1160, basically rounded off, and kind of in no man's land right now. So any breaches down below 1160, in my opinion, are going to have to be sold, and any rallies up until 1170 are going to have to be sold on gold. Let's go back to our scanner. Let's get back into the S&P. And as you can see, these numbers are starting to flip around a little bit here. Our 60 minutes starting to move because some of the stocks in the S&P are starting to open. This is a picture of the, this is a picture of the Shanghai historical on the 60-minute on our breadth calculations. Let me see if I can get this into view here. Here we go. That's an historical. We did these back tests couple of weeks ago, finished them, so they don't have the latest action incorporated. This is our 60-minute on the tie set 100. These are breadth crossovers, always in the market, long or short. And this is our S&P on our 60-minute. A little bit different curve, had some volatility. These are crossovers on our 60-minute breadth calculations. Hope you guys can see this if it's in the den. So again, I'm a big fan of paying attention to our breadth crossovers on our 60-minute on our short term. It's really good proof of concept across the globe on major market indices. We did a lot of testing on this. My nose is itching. Woo. What does that mean? Is that superstition? I need to. So I've got a lot of confidence in the 60-minute crossovers on the short term, and I couple those with some of the long-term inflection points. One of the things that we take a look at always is what's the overhanging tone or tide of the marketplace. The overhanging tone of the marketplace is still negative, and even if we open this morning, I still feel like we're going to be long-term breadth negative on our weekly and negative, excuse me, I was looking at something being typed in here. Weekly and daily negative still, even with the gap up this morning. So that's the way I'm looking at that. We're going to take a look at something else we've been talking about, and my screen is, oh, I just lost my charts. How did that happen? Let's try to get those back. Let me redo this. There we go. And let me repost it in the den. Al, I'm learning. I don't need you anymore, Al. You worked yourself out of a job. Thanks for the education. All right. Here we go. Let's take a look at one more thing we've been harping on. That was a really, really decent long. The ruble, we're not going to show that. That's just kind of the same situation. But let's take a look at the U.S. dollar. This is something we've got to pay attention to here. Here's the daily situation. We've got a new supply area that happened here, a new balance area that's appeared today. We kind of were forewarned that yesterday with this orange bar. The scanners got this incorporated into it. So now support on the dollar is going to be 95.89. And breakouts above 96.93 are going to have to be bought. So you got, again, kind of in no man's land right now. Probably got some intraday trading opportunities, but again, I'm looking for long-term inflection points to be met. 95.89 and breakouts above 96.93 on the dollar. Kind of not a lot of action here right now you can take advantage of. Here's the 240s, just kind of probably swim around, rattle around here. And that's the take on the S&Ps. Let's take a look really quick at the September 10-year. This is something I talked yesterday about. We got some contention here around 127.11. Couldn't get through that. We talked, I'm personally not a big fan of shorting the treasuries. So that was more of a target-rich environment on the long side, and I'm not a big fan of shorting these. So kind of staying away from that. The good news is, for the long side, we don't have any new profiles attempting to appear on our daily. So again, this could be a little bit of a continuation pattern at some point north, and 127.11 closes above there are going to have to be looked at as buying opportunities on the 10-year. Short term, you've got support on the 10-year, 126.11. That's an entire handle below that weekly unfair high or unfair low. So again, support on the 10-year is 126.11 on the bottom of our profile on our short term, not ultra short term. We're going to take a look at copper when we get back, guys. Hang around.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're going to pull up to Shanghai really quick here just to let you know the action today. We still just got back literally into unfurloughs on the daily. So again, you've got some government intervention going on here. There's no mystery about that. How that's going to work out, nobody knows. But the Chinese will just do what they have to do, and if they have to, devalue their currency to raise the market, they'll do that. So just anything's on the table, anything. Hang Seng actually didn't do bad either. It's kind of in concert with that. So, market's seemingly liking this. The Greece thing is not a bad piece of news either. So again, you got a little bit of bounce in the S&Ps this morning. I'm looking at this as something to sell. So we've got 2060 sitting in our face. If you didn't catch the first part of this show, there's really nothing to hang on to down here. Remember, we've got this profile that appeared above price action that's relatively bearish. The breadth is still negative, no matter on a long term, no matter what happens this morning. I feel like these are going to stay relatively bearish on kind of an overhanging tone of the marketplace. A lot of the stocks in the S&P are not going to more than likely get back into that balanced area and are going to stay negatively toned. these are some picks on the scanner right now. I'm looking at Exelon, EXC. These are, I just did a top of the box here sort, just to kind of get some ideas. Is it EXC? Yeah, here we go. So what it's doing here, it's okay. So here's what we have: 32.32 bottom of our weekly profile. That's good that we got back above, and that started happening yesterday. In the midst of all the sell-off. So right now, in my opinion, you've got a little bit of a trading opportunity, maybe a little bit of a bounce here. Exelon, 32.52, but stops down below there. Excuse me. We're trading 32.59 pre-market. Yeah. Okay. So again, looking at this in normal situations, I would say, yeah, you might have a change of tone here in Exelon, but since my tone on the marketplace in general is relatively bearish, I'm not going to look at this as an opportunity to buy. All right. So what I did is I just kind of looked at things that were out there that were kind of migrating around the top of our profiles on our daily. And since we've got a situation, did I lose my screen? You guys, that's weird because I can't see my screen. See if we can get this back up. Okay, here we go. All right, let me repost this. Okay, maybe we're back. Okay, cool. All right, so I'm passing on this type of opportunity. Usually when we break above profiles and come back and retest, that's usually a relatively bullish sign, and we might have some action on the upside today based on the market gapping up. But again, I'm passing on a lot of longs right now because the overhanging tone of the marketplace, in my opinion, is bearish. So as we look at the scanner, just to kind of recap this before we got about 20 seconds left before we end the show, again, breadths, a lot of the stocks are opening, breadth still negative across the board. Taking a look at some of our indicators on breadth, it's just not a pretty picture as far as the mass of the S&P 500 stocks showing some kind of concert with the gap up in futures here. So I'm looking at this opportunity in futures as a sell around 2060 with stops above, guys. Stops above 2066 to be exact. Thanks for joining us. Larry Pesavento next. I'll be doing Tom's show this afternoon at 4 o'clock. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.